Hi, welcome back to our channel, and I hope you're having an awesome day. Today we have a very exciting company to go over. It's an old school trucking manufacturer called Paccar. Why would this possibly be exciting on a channel devoted to exponentially transformative technologies? Well, for two reasons. One is that Ark just poured a ton of money into them and added them to their portfolio mix. Two, they just announced a huge partnership with autonomous software company Aurora Driver. I think you're really going to want to stick around for what we're going to go over on this company because it has massive potential moving forward. So if you enjoy our content and you find it helpful, well then make sure to like the video down below, subscribe to our channel, and turn on the bell notification so that you can be notified every time we post a new video, and comment down below with your thoughts on Paccar and how the company might evolve over the next few years. For those of you that are new here, my name is Mark, and I'm a fan of exponential transformative technology and business revolutions that are happening all around us. I hope you enjoy the journey as we explore new companies and new industries. So, who is Paccar? Paccar is an American Fortune 500 company and is among the largest manufacturers of medium and heavy-duty trucks in the world. Paccar engages in the design, manufacture, and customer support of light, medium, and heavy-duty trucks under the Kenworth, Peterbilt, Leland trucks, and DAF nameplates. Now, the company is a significant player in this space. In addition to having a significant presence in other markets, the firm holds a 30% market share in the US and Canadian Class 8 markets. So Class 8 is this size truck. It's actually a really huge truck with very large size and heavy weight. So I think it says it's a GVWR over 33,000. And as you can see, that means the gross vehicle weight of the truck. So typically called severe duty, Class 8 applies to cement trucks and dump trucks. It also is when you'll likely find big rigs such as Freightliners, Kenworths, and Peterbilt. So it's very heavy trucks that they have a good size market share. That was that 30% market share. Over the years, the firm has demonstrated its quality, strength, and stability. So the COVID year was very tough on the company, but the future definitely looks bright. One of the main reasons because of an announcement the other day. This is according to Ark, that Aurora partnered with Paccar to create and deploy autonomous trucks within the next couple of years. Aurora is an autonomous technology startup led by Chris Urmson, who was the former CTO of the self-driving unit at Google. So it's a pretty big deal. As well as Sterling Anderson, who is the former autopilot head at Tesla. So those two together is a pretty big deal. In addition, Drew Bagnelli, who's a founding member of Uber's advanced technology group. In Ark's opinion, highly respected truck manufacturer Paccar will help Aurora scale the number of electric and autonomous trucks on public roads much faster than otherwise would have been the case. So Paccar, while they don't have electric trucks right now, and they were probably threatened by Tesla and other companies, this will help them keep up and actually probably dominate in an industry. Right now, they have actually put into a set of R&D budget on the side, so that should be growing quite a bit over the next few years. It'll eat into their overall profits, but their acceleration into electric combined with the push of this partnership should really help this one company stay ahead of most other truck manufacturers. So as a result, Aurora's autonomous system could be trained on more real-world scenarios than will those of most other truck manufacturers, except perhaps for Tesla. Important to both Aurora and Paccar, fully integrated, purpose-built autonomous vehicles are likely to perform much better than the combination of outsourced autonomous systems and manufactured trucks. So hopefully they have economies of scale and efficiencies by working together so they can roll it out to the full market and their overall costs will be much lower. In addition, Ark goes into why their profits will be higher. So Ark feels even that those economies of scale will be even more efficient because they're saying that the transportation industry will consolidate dramatically during the transition to autonomous and electric platforms. So there'll only be a few manufacturers and trucking companies left. I imagine that most of the smaller operators, since it is such a fragmented industry of operators, will go away, unfortunately, since they won't need the manpower to travel. You could really have a national company that owns the fleet and just has the trucks go back and forth. Ark estimates that autonomous electric trucks could lower freight transportation costs from 12 cents to roughly 3 cents per ton mile. That's enormous. That undercuts rail prices and potentially putting $400 billion in fixed rail assets at risk. So that is a real upheaval in the industry. And it seems like Paccar is positioning themselves to be one of the survivors. And in this market, if you're a survivor, you're pretty much a thriver. So it should be pretty interesting. You can see here that Ark has upped their share of purchase. They didn't have anything in Paccar, and then over the last couple of days, they've purchased, looks like 51 million almost, or 52 million in new purchases of Paccar stock. So that actually has increased the price of the stock, but overall, it shows their investment and belief that this will be a game changer, this partnership. When looking at Paccar, in terms of the financing, that there's three main areas that we look at. One is, can they handle their debt? Looking at the company's overall performance from 2019 and before, since 2020 was such an odd year, they really have no long-term debt. And even in 2020, to date, their debt is hardly anything, which is fantastic. Usually with current ratio, you want that, which is current assets over current liabilities, to be greater than 1.5. They definitely have that right now at a 2.4. So that's a great sign for their debt. And also cash, they have a lot of it, 4.2 billion. So they have a lot of money to hold them over future bad times, as well as funding R&D to get them into the electric space for their trucks. In terms of growth, their book value has increased every year. So the overall underlying value of the company has been increasing, which is good for shareholders and also good for the company's prospects in the future. In addition, their sales growth has always been 10% or higher. 2020 might be a little different. And finally, are they well managed? The ownership, usually you like to see ownership greater than 10%, where the owners are the executive suite as well as board members. And that is not the case here. So that is the biggest no for me on the company so far. Although return on equity is increasing, which we want to see. Last year it was 26% in 2019. It's fantastic. Free cash flow is increasing. Return on capital, that is growing. So we see that is 14% in 2019. So it's all around, it's pretty well-managed company. The only negative for me is that a lot of funds and 401ks own this. It's not a company where the ownership is the executives or board members. So that's my only concern for their vested interest in the long term. But with this new partnership, stable customer base, and the amount of cash they have on hand, I think they'll do well in the future. The fourth area I don't have here is their moat, which means the ability for the company to wade off competition. How strong will their earnings be in the future? You know, right now they have a 30% base. Customers love them. They have well-built trucks. It doesn't seem like their sales fluctuate year to year outside of a pandemic year. And now that they're positioning themselves to be a major player in the electric and autonomous era, I think that their moat will be safely intact for the next couple of years at least. And the last area we want to look at is how are they doing in terms of their positives and negatives according to the analyst consensus. So Morningstar's consolidated view shows that, one, for the positives, Paccar's premium brand strategy and strong dealer network continue to resonate with owner-operators and with fleets seeking to recruit and retain drivers. Their management's recent efforts to integrate product development for its North American brands, the Kenilworth and Peterbilt, will generate efficiencies and enhance its long-term performance. And finally, a tight trucking labor market in recent years is likely to have a long-term impact on carriers' purchasing decisions. driving adoption of Paccar trucks with higher margin, productivity, enhancing features. So the tightening truck labor market, even before electric, even before autonomous, I should say, is driving companies to choose them because they prefer the well-built Paccar trucks, is helping them. After the announcement, now it should make it even more of an impact. I would say the negatives here that the analysts are looking at are interesting. First, they say that new heavy-duty truck entrants such as Tesla, Nikola, and Zios are likely to gain market share in their electric powertrain vehicles. And that's true. They're already positioned to do that. Tesla's introducing their truck soon. So they could see a dent, although I have the feeling this market might be apprehensive to adopt it as fast as the car segment has, and the Paccar might have a chance to catch up. Now, they say a large-scale transition to the electric powertrain heavy-duty trucks is likely to profoundly disrupt incumbent manufacturers. Hopefully, that's shaken up now. And finally, advances in driver assistance technology, government emission standards, and powertrain platforms could drive up Paccar's research and development costs. This is absolutely true, and it's happening now. But with their cash reserves, it doesn't matter. So I think they'll definitely be able to sustain this, which will impact their income or revenue over time. I should say income. We'll see how that impacts them in the long-term investment. So that is a look at Paccar. You can see that this news is big. It actually helps ward off most of the negative bull component. It seems like the company's financials are well in order, and they are definitely a company to look at as an exponential, transformative company. So I'd love to hear what you think. Please comment below, and I'll definitely respond to any comments, and looking forward to talking to you next time.